If you're here, it's to get an overlook on the market, and I'm happy to give it to you. Just notice I have a stain on my shirt. It's all good. Listen, we're going to go through everything. We're going to go through the SPY, the IWM, the QQQ, and a couple of the magnificent stocks that everybody knows and loves. Once we get through it, if you like it, if you learned a little something, I want you to hit a like, hit that subscribe. We're going to try and get this out every Sunday for you, okay? Got a lot to go over here, so let's just jump right into it. All right, let's minimize this big face of mine, and then you can't see that stain that I'm trying to cover up. But just to jump right into this, guys, we have the S&P 500. If you watched the YouTube short that we sent out a little earlier, you can tell that we are still above a rising 10-day moving average. We still have many areas of resistance. First off and foremost, this 21-day moving average, which has been bouncing off of the past 3 times. Will this pull back and bounce again off the 21-day moving average? If it does, we still have the 30-day. The 30-day here also is showing support. So we are still very extended. We do need a pullback. How far back are we going to come? Nobody actually knows, but we do know that this is healthy. We've seen this big pullback actually happen in tech. That's where this big pullback had started. Personally, maybe I was so focused in on NVIDIA, but that pullback did start in NVIDIA in my personal opinion. It was just rising. It was going fast. I even said in chat that it was looking like it was going parabolic. So I ended up taking out of some of my, actually half of my shares in the aftermarket before the big pullback on Friday. I have a tendency just to know and understand when we start to go parabolic and things, when things start to get a little too euphoric for me, I like to de-risk a little bit, and I am very happy that I did that, locking in many profits. So the S&P 500 is looking very good, but a lot of people, I've heard them arguing, yeah, well, it is the tech that's holding up. It's just tech. Well, that's why we like to do this. The S&P 500 is looking good above a 10-day moving average. Let's look at the equal weighted S&P 500, shall we? So if we look at this equal weighted S&P 500, you can see that we are at an all-time high in the equal weighted, okay? The equal weighted, it's showing at 164.87, and even at this pullback, we're sitting at 165.51. So even with an equal weighted S&P 500, meaning that everything is even, we don't have more Microsoft or more technology rather than the other, everything is equally weighted, we are still seeing all-time highs here in the RSP, or the equal weighted exchange, okay? So things, in my opinion, as of right now, are, yes, a little extended, especially even in the equal weighted. We are so far extended from a 10-day moving average. We are in due for a pullback. So if you are in positions and you have too much in your positions, you need to really take a look at what you're holding, how much of it you're holding, and if you have the proper risk management. If you bought at these highs, you need to understand, we don't know how far back we're going to pull back. Maybe you position yourself a little different, okay? Don't get yourself all in at these highs. You want to wait for a pullback where it's going to find support rather on a 10, 21, or a 30-day moving average before finding your stocks and getting back in, okay? Next up, we have the Qs. So this is the tech-weighted ETF. This has all your large movers like NVIDIA in it, your Microsofts, your all your big tech. So if it's technology, you can find it usually in the QQQ. Right now, we're having a beautiful pullback. You can see that it has been supported multiple times on this 30-day moving average, so we still have room to pull back. The tech is still not looking weak. People might call this a bubble. People might call this an AI bubble, if you will, but it's not looking like a bubble. A bubble would rise up a lot faster. It would get very far extended. This is just gradually moving up, having consistent pullbacks here. It's looking absolutely beautiful in my opinion. Now, could we pull all the way back to a 200-day moving average? Sure. Is it likely? Not so much. As of right now, we are seeing a pullback on higher volume. We haven't seen this volume since October 25th, right before we hit the low. Okay, so the last time we seen volume come in at this high of a selling volume was our low. So might this be a pullback like we had a low here and we're going to see institutional ownership buying it back up? We don't know yet, but it's definitely something to keep an eye on. Definitely something to look through your stocks, through your stock watch list, which we come out with every week, and see what is having a pullback, what is creating those trend lines, where can we get in and have a significant advantage of the rest of your opponents who are buying at the highs, right? So these pullbacks, look at them to find a spot to ingest the stocks that you so hold dear in your watch list. So next up is the SMH, which this is the semiconductor ETF. Now, if you don't know, pay attention, guys. The semiconductors have been leading the way. Okay, this SMH, I have a lot of shares in my larger, longer term fund. I'm not holding any ETFs in my portfolio. What I control. I give a lot of the bigger money, the big boy money to the financial advisors, as I would advise everybody should. And then you hold on and you play and manage with your money that you're willing to try and outpace or outbeat the hedge funds, to outbeat the mutual fund managers. Okay. And then that's what we're doing here. We're finding individual stocks to play, but we want to know where the tech heavy, where the semiconductor heavy. We want to find which ETFs are outperforming the S&P 500, and this has been. You can see we've drawn these lines well before we took off from here, and you can see this extension from the 10-day will not go unnoticed. People are going to be taking profits when we get too far extended, and that's just what's happening here. We have not came back and retested this 21-day moving average since February 21st. We have been on just a bull push to the north side. So this pullback here is looking absolutely phenomenal, but the fact that it is on such high volume, the highest volume out of everything else, I mean, we haven't seen this volume here since the pullback in January, okay, in January of 22. So this might make you want to take some heed in the semiconductors. This might be a change in direction here. This might be the top. Now, I'm not calling the top, but I'm saying that this very well could be with the amount of volume that came in. So if it is, I imagine to have some pops and then more drops. Okay, we're going to see less volume to the north side and more volume to the south side, more distribution days. So when we look at the SMH, the ETF for the semiconductors, you need to understand that when you see a significant selling volume like this, it looks like distribution on a higher level. This isn't just you and I, retail traders selling, even though there was probably some panic that led to even more selling volume, but this looks more institutional selling here at these highs. So we will see. We'll see how this ship shapes up. Maybe we find some support on the 10 and the 21-day moving average. Regardless, we need to keep our eyes peeled, stay vigilant in this market. Looks like that stain's finally starting to subside. It's just a watermark. It wasn't actually a stain, but I'm happy to see it's finally gone. Why I'm so conscious about it, I don't know, but hey, I'm human too, right? Next up is the IWM, the Russell 2000. This is your small caps, ladies and gentlemen. Wow, there's a lot of lines on here. Maybe we just go ahead and get rid of that. Let me get rid of all these lines. You can see them. It's clear. We had this top. We broke through the top. We pulled back. We found support on a 50-day moving average, and now we're pulling higher. Just like the rest, we are a little extended from a 10-day moving average, but we aren't as extended as most others. It's happy to see a little breath in this market here. What do I mean by that? Well, because the overall bigger techs, the Dow Jones Industrial, which we'll get to, has been running rampant. The S&P 500, the NASDAQ has all been doing well. The IWM has been lagging here. And I've said before, when we had this big pullback, that when everything else was pulling back, the IWM was still holding its ground up here and then followed through when we had a big bear market back here a few years ago in 2021. Okay, so the IWM was a lagger, and now that we are having a big bull run in the S&P 500 since the October lows of 2022, we are also now seeing the fact that, 2023, we're now seeing the IWM finally start to pick up here. So we might actually see this thing get back up. I don't know when we're going to see all-time highs. This might take many, many months down the road, but we're starting to see a north trajectory here. We're starting to see an uptrend here. We're starting to see some levels being held on this 50-day moving average right here in this area. It's a beautiful thing to see when we've been down for so long. So the IWM, this is showing that we need to look into our small caps. We need to find our small and mid caps. We need to see what's moving there, what's setting up for us, and where we can get our capital in. So that's the IWM. This is the NASDAQ, which is going to be relatively similar to the S&P 500. This is the futures, the NASDAQ futures, so it's going to look a little different here. It's not going to have your pre-market and your aftermarket days, the gray areas. They're not in here, but you can see it's looking just like the S&P 500. It's not as extended. It's holding these levels pretty well, but you can tell we found support on the 21-day moving average multiple times, and before that, the 30-day moving average, and even on here when Jerome Powell dropped the mic. So here we sit, a little extended, but finding support. Will it be the 10, 21, 30-day, or is this a change in trajectory? We will see for the NASDAQ. The Dow Jones Industrial, now up here, finding support for its third time. Should we say final? I don't know. That's not what I would like to. I don't like to predict. I like to react to the price action. So we will have to see what happens here. All the other times that the Dow Jones Industrial came down to this 30-day moving average, though, we have found support and it popped back up. This time it's finding support and kind of teetering out here. So we'll have to see if this wants to actually find more trajectory here and continue higher. We know we've seen a beautiful run here. Sorry, my charts are getting a little wonky right now. We've seen this trajectory here, and it broke all-time highs on a very easy push, like butter through here, before pulling back and finding that support on the 30-day moving average. So we still have movement here, but I would like to say we can take heed in our bigger Coca-Colas, our Amazons, our bigger stocks, our older stocks here on when we break this 30-day moving average. So that is something to keep an eye on. And let's take a look at a few other ones. We have like the Builders ETF. So I remember this day, a lot of people were panicking, like, you know, it's heading down, it's going down. You know, the Nail ETF, which is just the Home Builders Trust ETF. We had this big panic. Well, it's a great day to buy, right? And we just followed this 50-day moving average, and now we're popping back up to all-time highs of 137.63. So NAIL, which is very easy to remember for a home builders, right, is still a little extended of that 10-day moving average, and things are looking very nice for the overall NAIL ETF. The IBB, so I've been playing a lot of these biotech stocks, so I want to keep myself familiar with this. The IBB is looking a lot like the IWM if you take a look here. It's bouncing around sideways, making new headwinds from the 2022 area and from its past. We can see that we've had this resistance at 138.50 that is finally broke through, now having a pullback, trying to use that resistance as support. So if this wants to actually take off here, this is looking pretty constructive on the 10-day moving average. If we can get this thing to push higher and continue higher, we might see more relative strength in the biotechnologies. Let's take a look at the VIX. If you don't know what the VIX is a volatility index. Volatility meaning the shares that are trading throughout the day. If you have a high volume, a high VIX, or a fasting, when people start to trade relatively fast, this will move up. And usually when the VIX move up, what you'll do is find correlation in selling, right? So when the volume moves up very fast, you'll see selling come in very fast, because a lot of people, they say they take the stairs up and they take the elevator down. And the reason for that is because people panic. Panic moves the volatility, okay? People like to accumulate shares slowly, and they'll buy a little here, they'll buy a little there. But when we have a major pullback, people want to sell immediately, and they want to sell now, and they don't want to think about it. They want it out of their hands. They panic. And that's what this volatility is. When you get these big blurps of panic here, you get big blurps of people selling. Let's take a look at our dollar. Okay, our dollar has made a nice flush down here, a move down. You could call this a head and shoulders pattern if you want. I don't really care to call out patterns too much, but this does look like a head and shoulders pattern, which means and could indicate further selling here and heading down. We do have support down here at around that $100 area. So this might come down an extra $2.75 before we have to take another look and say, hey, is this being supported in that area, or is it going to flush through? So we'll see in correlation. We'll go through some of the bigger stocks. We had a huge pullback in NVIDIA, which is due, right? I mean, it was due. We had this huge push up. This is actually where I took my trend break. Well, I'll have once I close out of this position completely, which might be Monday morning, tomorrow morning. Then I will go over this trade in indefinite. But we have this downtrend, and I bought it on the breakout, and we held up until 1R, which we can go through risk strategy. The 1R, I took out half my shares, and I held the rest up until the aftermarkets at 937. Absolute monstrous gain, but we have this huge pullback day, and these last 5 shares, if we look at in the pre-market, it's just hovering above that 10-day moving average. If it closes below the 10-day moving average, I'll be out of this waiting for another trend break to set up. So that NVIDIA pullback probably hurt a lot of people if they weren't taking profits on the way up, or if they don't have proper risk management. And that's why I always preach on this channel, you need to have proper risk management. So I hope that you're learning a little from this. And if you are, please hit that like, hit that subscribe. We're doing our absolute best to grow this community. We want to make sure that we can help anyone that is involved. So next up, we have SMCI. I don't want to talk too much about this. It is a leader in the market comparably, but NVIDIA is our overall leader in the semiconductors, so we're not going to look too much in this. Tesla, I mean, poor Uncle Tesla has just been taking one blow after another. It is on a downtrend. I did point out this huge pennant that it created. I was excited for this thing to break through and us to get some shares for a longer term position, but it did not. It came through and actually broke this to the downside, which is terribly scary for any stockholders. But I always preach, if you're below a 200-day moving average, I don't want anything to do with that stock. And here's the reason why. Because, it can just head lower. And that's what we're seeing here, creating new lows for the year, okay? Well, technically not for the year, but we're getting very close to the yearly lows. Next up is Netflix. Netflix just chilling way up here. Netflix and chilling up here, getting close to its all-time highs of $799, just about $100 below that. So I guess we got a little ways to go, but I just don't want to take away from its relative strength in the overall market. Holding this 10-day moving average, creating a beautiful push here off of its earnings guidance and earnings take. Next up is Microsoft. If I remember right, yes, we are getting a nice pullback in Microsoft. Sorry about the charts getting a little wonky here. Let me take a little sip. I'm getting raspy. We're finding some support here on this 50-day moving average, it looks like. We're getting a bounce up. But it looks like these moving averages are starting to converge, which tells me that if we have this downtrend right here, and it starts to hold this downtrend, I'm worried it might start looking more like an Apple. Now, with AI, with everything that's going on with Microsoft, a lot of this could have been priced in, and we might see this thing start to it's a big boat of a stock. They have a lot going for them. So this is a slower mover. It only moves 1.5% at a time. After a big push like this, it needs some time to digest that. So that 50-day moving average might start to curl over here. It might get tighter, and we might see a bigger move in the overall market. Or we could turn around, but this is still too early of a stage to tell. This might be its stage 3, where it's gonna trade sideways for a while and then curl back over, finding some support maybe somewhere around its 200-day or around this 350. It's all still too early to tell. Next up, the other big boat that we need to take a look at is Amazon. AMZN. AMZN is back up at this resistance highs up here, guys. So let's keep an eye out for this. Up here at this 177, 180 level, there's going to be some resistance. We've seen plenty of selling every time this came up. 1, 2, 3, 4. Now we're at its 5th time trying to decide whether if it wants to push higher or if it needs a pullback from here. Amazon is very, very heavily weighted in a lot of our ETFs, so this will also help contribute to what is going on with the overall market. Next up is Meta. Good old Meta. What a beautiful push to a high, all-time high, mind you, of 523.57. Old Zuckerberg, which I'm a fan now. I'm a fan. The guy's been doing jiu-jitsu. He's been training hard. So I am a fan now. I like to see anybody's journey into the martial arts. It's a beautiful thing. But yeah, all the way up here at 523.57, it looks absolutely monstrous. Can it hold this trajectory? I mean, with its numbers, with the volume that's came in, it's just pushing higher. So you can't really deny Meta's strength. Its strength, especially the relative volume, on relative strength compared to the overall market, it's a leader. It's still a leader, which is rare to find in other bull markets. It was a leader in the last bull market. It's a leader in this bull market. Let's see if it can continue its trajectory and keep up with this AI cycle. Next up is Apple. Apple, this poor Apple stock, well below a 200-day moving average. I don't even want to give it much time. Sure, we might be finding some support down here at 164, maybe even where it sits at 170, but when it's below a 200-day moving average and the 200-day moving average is starting to curl over, I'm expecting a pop and for this to continue down. So it's got a lot of things, a lot of issues, but to me, we're in a downward trending here. So good luck to Apple. Good luck to all your investors. But I do feel like the bigger institutional ownerships are pulling their money from Apple and they're putting it in other places. Next up is going to be Google. Google bouncing off of a 200-day moving average. This is definitely a key area to watch here because we are seeing a downward trend line. Okay, this downward trend line, if it holds just like its last time it popped off of here, it could be very, very bad for the overall stock. If it gets below this 200-day moving average, that's going to be even worse because now it's below this area of resistance of 140. So if it wants to stay below or 138, 140-ish area, if it stays below this and gets tight and breaks to the downside, we might see a further move down below a 200-day moving average, and it's starting to flatten out. This does not look good for the overall Google stock. Let's go over Amaro really quick. Now, if you're not in the Bitcoin space, this is a Bitcoin miner equity. Okay, it's very volatile, so you need to be careful when you're playing the stock or even looking at it. My battery's running low. Let's make sure that's plugged in, shall we? Give me 1 second here. There we go. All right, back like a fiend on crack. We do not condone drugs to this channel. This Mara stock here, very simply put, is on an uptrend, but these big pullbacks here, it's hard to get in and hold in tomorrow. But I did point out this downtrend here. It broke through, but I took a different stock instead, a little bit faster of a mover, CLSK. Now, you say faster mover, but this already moves at 13.4%. So if you believe Bitcoin to move higher, I'm just playing the price action here. Bitcoin is at an all-time high or close to it right now, and we can go over that actually right now. So Bitcoin all the way up here, a little extended from a 10-day moving average, but it has reached a new all-time high, 71,055. Now, what will happen here? I don't know. The last time it reached an all-time new high, it had a big major pullback. Will this pull back and find support and then continue higher? Will this break through and head to 100,000 before pulling back again? Only time's going to be able to tell. All I see here, though, is that we are extended. We're definitely extended from a 10-day moving average. Does Bitcoin relatively follow its moving averages? Well, sure. Everything follows its moving averages. It's what creates its moving averages. Do people pay attention to the moving averages much? No, they don't. But I do when it comes to Bitcoin because I think it just helps smooth the process out a little easier. So Bitcoin at an all-time high or relatively made a new all-time high and is holding relatively close. We're going to see what Bitcoin wants to do at these levels. So a few other things I just want to take a look at here. Let's not forget about gold. Now, if you guys seen my short earlier, I brought up the fact that gold is on an absolute rampage. Now, I did not get into gold because it's a slower mover, but I will tell you this, I still wish I did, right? I'm not going to have fear of missing out on this, but I will say this. You should gain a stock list of miners of gold ETFs if you find a 3x leverage. I don't have any off the top of my head right now, but it might be something you want to take a look at in case we do get a nice pullback like a nice pullback in the meantime. If it sets up a trend break for myself, that's what I'm going to be looking into tonight when I go over some stocks with my buddy Adam. So this is definitely a big push, a big change in trajectory when we have this pullback, setting new higher lows, and then breaking the all-time highs. So that's absolutely beautiful to see for gold. When it comes to oil is kind of just piddling around in the middle, playing an IWM type play where it's just kind of stuck in this range here of 97 and 120. Let's see, what do we got here? This is light sweet crude, which is going to look about the same. TAN, TAN is a like a solar ETF, and it's just well below its 200-day moving average. It's just failing. So I'm not going to talk too much about that. One other thing I do want to look at is Hack, which is a cybersecurity, because cybersecurity made a big move up here, and I'm thinking if we keep an eye on it, we might find some rotation into it, just because we're seeing AI, we're seeing technology. What's next? You know, if you have all this money going into AI and technology, my thought is you're going to need security, right? Same thing when the internet came out. When the internet came out and everybody was, you know, the internet's not going to be around, you know, in the 80s, the internet's not going to be around. Well, once the internet took its bubble and then the leaders continued higher, well, then you needed the security. The security came in. So we are already seeing a big move on, cybersecurity, but I'm thinking we're going to see more movement out of this. So we're just going to keep an eye on this, holding a 50-day moving average currently. Maybe it's going to find some more support on this 30-day moving average. We're not sure just yet, but we're going to keep a close eye on this to see if something sets up. So, ladies and gentlemen, just to do a quick overview, we talked about the S&P 500 and it's weighted, equal weighted. We are doing just fine up here. We are constantly finding support on the 10 and 21-day moving average. We are not seeing any relative weakness just yet, maybe in certain sectors, but in the overall market, this broad term market looks great. We're still healthy. Not saying it can't change on a dime. Not saying that we might not get a big panic or a big sell-off, but what I am saying is It's hard to look down on a market that looks so good. We're on a long-term uptrend, a short-term uptrend, and a mid-term uptrend. So I don't care what the news is saying. I don't care about what anybody says. When I take a look at price action, that's how I play. I'm still happy. I'm still looking for my setups. Currently, I'm only in 3, 4, 5 stocks right now, which a lot of them I've actually all of them, but one I've de-risked in. So they're just runners that are running. So if they hold out and they continue higher, then so be it. And if you're interested in what I'm holding or what I'm doing, just leave a comment and I'll be happy to go over. I can make a totally separate video for that. Okay, guys, so thank you so much. If you've stuck around throughout this whole video, if you've literally stuck around throughout this whole thing, first of all, thank you. I do appreciate you. But leave a comment in the bottom and say baloney. That'll be a hard one to spell. Type baloney. No, let's do macaroni because baloney means like I'm full of baloney. Let's do macaroni. How about that? Type in macaroni in the comments if you actually made it all the way to the end of this video. I appreciate you. Thank you so much. My name is Dave. This is LoFiTrader, and we'll see you next week, guys.